All right, let's dive in. Today, we're going to tackle a topic that sounds super intimidating, technical analysis. But for a minute, I want you to just forget all the scary formulas and the jargon. Instead, I want you to think of this as an expedition. We're about to gear up and start our very first climb of this really fascinating mountain, and I'm going to be your guide for the whole thing. Let's get started.
And this quote from Mukul Agrawal, man, it just nails it, right? Looking at technical analysis like you're climbing a mountain is the perfect way to see it. It's a journey, and like any journey, it needs a solid foundation, the right equipment, and of course, a clear map to find your way.
So before any big trip, you have to survey the land, right? You have to understand the landscape. So our first stop, our base camp, is all about figuring out what analysis even means. And you'll see it's way, way simpler than you might think.
Okay, let's just pull the curtain back on this word analysis. It's not some complicated high finance term reserved for Wall Street. Nope, it's something we humans do every single day. You know, from your parents figuring out the best school for you to you trying to decide which city to move to. It's just looking at the good, looking at the bad, and then making a decision. That's it.
Now, in the world of market analysis, there are kind of two main paths up this mountain. Think of them as two brothers, technical and fundamental analysis. Fundamental analysis, that's like checking the quality of your climbing gear. It digs into a company's health, its earnings, and it asks the question, what should I buy? Is this a good, solid company? But technical analysis, that's our focus today, it's more like reading the weather patterns on the mountain. It looks at charts and price history to answer a totally different question. At what price should I buy?
Okay, so we've got the lay of the land. Now it's time to pack our gear. And for this climb into technical analysis, our essential gear is really a set of 3 core beliefs. These are the absolute foundational ideas that every technical analyst has in their backpack.
First up, the market discounts everything. What this really means is that any piece of news, good, bad, you name it, is already baked into the stock's price. The chart tells the whole story. Second, history tends to repeat itself. Why? Because markets are driven by people, and people are driven by the same old emotions, fear and greed. Those emotions don't change, so the patterns they create tend to pop up again and again. And third, the market moves in trends. Think of it like physics. An object in motion tends to stay in motion. A stock price moving up is likely to keep moving up until something big comes along to stop it.
All right, our gear is packed and we're ready to go. Now it's time to learn how to actually read the map. And for a technical analyst, the map is the stock chart. The mountains and valleys on that map, those are the patterns we need to learn to recognize. And this right here is our main navigation tool, the candlestick chart. Now this isn't your average line graph. A single candlestick gives us 4 key pieces of info: where the price opened, how high it went, how low it went, and where it closed. But more than that, its color and its shape literally tell a story about the fight between the buyers and the sellers. You can actually see the market's emotions.
And you know what's kind of wild? Sometimes these really complex market stories boil down to super simple, easy-to-spot shapes. Let's start with a letter you definitely know, the letter W. The W pattern is what we call a double bottom. It's a bullish sign, which means it suggests the price might be heading up. Just picture it. The price falls and hits a low point. It bounces up a little, then falls back to that exact same low again, but it can't break through. It's like the market has found a solid floor, a launching pad for a new climb. And hey, if a W is a sign that things might be looking up, what do you think its mirror image signals? Yep, you got it. The letter M.
The M pattern, or the double top, is the opposite. It's a bearish warning sign. This time the price climbs to a high point, pulls back, and then tries to hit that same peak again. But it fails. It runs out of gas. This tells us that the buyers are getting tired. The climb is hitting a ceiling, and the price could be getting ready to head back down the mountain.
So having a map and knowing the patterns is huge, but any great mountaineer will tell you you also need a compass to double-check your direction and to really understand the conditions. In our world, these compasses are called indicators.
First on the list is the moving average. Just think of this as a tool that gets rid of all the chaotic, day-to-day noise. It smooths out those little zigs and zags in the price and gives you one clean, simple line that helps you see the true underlying direction of the trend. It's awesome for cutting through the clutter.
Next up, we have the Relative Strength Index, or RSI. This one is a super powerful momentum indicator. It's basically the speedometer for our climb. It tells us how fast the price is moving up or down, and that helps us figure out if the climb is getting too steep, too fast, or if a fall is finally losing steam.
The RSI scale is simple. It goes from 0 to 100. Now, if you see a reading above 70, that's a sign that a stock might be overbought. Think about it like your speedometer hitting the red zone on a long climb. The ascent has been really, really fast, and the price probably needs to take a breather before it can go any higher.
And on the flip side, if the RSI drops below 30, that suggests a stock is oversold. It's like a really rapid descent that might be running out of downward momentum. It tells us the sellers might be exhausted, and the stock could be looking for a foothold to start climbing back up.
Okay, and this brings us to the final, and I mean the most critical part of our entire expedition, the climb itself. Because this isn't just about technical skill, it's about managing the dangers out there, the risk, and maybe even more importantly, managing the challenges inside your own head.
Risk management? That's our safety gear. It's our ropes, our harness, our helmet. And the key thing to get here is that it's not about avoiding risk. I mean, you can't climb a mountain and have zero risk, right? It's about smartly deciding how much risk you're willing to take to get that potential reward. It's about knowing where your safety lines are before you even take the first step. Now, for the battle inside, first you've got greed. Greed is that little voice that whispers in your ear, even after you've hit your goal, to just push a little higher for an even better view, all while ignoring the storm clouds that are rolling in. That one impulse can turn a huge success into a dangerous fall.
And the opposite of that is fear. Fear is the panic that can just freeze you on the side of the mountain. It's the voice that, after one little slip-up, stops you from cutting your losses and getting back to safety, because you're just hoping things will magically get better. And they usually don't.
And that's really the core of it all. To successfully climb this mountain of technical analysis, you have to master those two powerful emotions. It takes the discipline to stick to your map and the courage to take those calculated risks, without ever letting fear or greed be the one in charge of the expedition.
So there we have it. We've gone over the landscape, the gear, the map, and the mindset you need for the climb. Technical analysis isn't some big, scary mystery anymore. The map is officially in your hands. So the only question left is, which peak are you going to climb first?